Hi there, it's Bill with Smart Trades. It's February 17th, and we're heading into the close a little afternoon Pacific time. Anyway, looking first at the S&P futures, I had mentioned that we might get up to the 1100, 1120 area if we could clear 1183. And you can see, indeed, we're right there. The high of the day, as I write, or as I speak, I should say, is at 1100. We're at 1097 now, jostling around. I think we'll probably go up and test that 1100 and perhaps a little bit higher even over the next day or so. And that area, if the breadth and volume continue to wane, is probably going to produce a turnaround to the downside. Now, if we blast through that 1100, 1106 area, the next target goes up to 1120, 1126, as I've mentioned before. The 1120 area. Now, if we get through 1125 or 1126, probably we're going to go up to new highs, but we'll cross that bridge when we get to it. For now, I would watch carefully over the next day or so for potential peak right in here at the 1100 to 1106 area. Again, assuming that the market does pause here and rolls over a bit, and that breadth and volume do not confirm the next little rally up. Here's the bigger picture looking at the S&P cash, and definitively this to me looks like a probable top. We have to take it one step at a time, but the severity of the break there coming out of that wedge, combined with a variety of other factors, it sure looks like a top. If we break through these recent lows, which I believe are around a 1044.50 basis the cash, that would confirm that the top is in. Just a quick review on Apple, which we had talked about in the last video, and the short-term chart is working its way into a nice classic Elliott wave pattern, and we could go a little bit higher from here. I had talked about the 202 to 205 area, and so far the high is 204.31, so we're right into that zone. That said, it looks to me like we're going to try to go up and fill the gap, which is up around 208. That would complete 5 waves in a C wave, and if we were to fail there around that 208 level, or even perhaps a little lower, I take a serious look at the downside in Apple. And this is important because Apple's been one of the leaders on the upside. Here's the daily chart on Apple to review, and again, these are the resistance areas that I had noted in the last video. And again, I want to emphasize how the volume has really expanded on the downside, and again, it's waning here as Apple rallies. So sure looks like a possible top. We have to wait and see, but I'd watch Apple carefully, and I think Apple is, again, a bit of a surrogate for the market as a whole. And Google, also very interesting here. Look how weak this rally is off of the lows. I think that this is a bad sign for the market as a whole. We have what appears to be an impulse wave down with confirming volume. The rally has weak volume and what appears to be a corrective pattern. We certainly, should see or could see somewhat higher prices. Perhaps Google up around the 550 area, filling this little gap here. But so far, Google doesn't look so good. So that's probably a bad sign, not just for Google, but for the market in general. And quickly off to gold. Gold looks a little bit better. The pattern off the high looks more corrective than not. And so I think there's a fairly good chance that we're going to see gold go up and test the highs and perhaps make a moderate new high. Keep in mind my original target was 1250 for the gold, so I think 1250 is not impossible here. We'll take that one step at a time, but looking for possible higher prices in gold and possibly a new high. Crude oil, far more ambiguous. It's broken the trend line and then recovered. It's just sort of rallying along the bottom of that wedge. Now, if it breaks the recent lows here, that would signal to me that the top is in crude. However, if we can manage to hold on, we may have one more rally, which could take us back up towards 90 at the top of the wedge into this area up here. But as I say, the situation for crude is a bit ambiguous, so we'll let it play out a bit. Certainly a lot of risk to be buying here, because if it does break these lows, should go down to test the '09 lows. And finally, here's the U.S. dollar, and the dollar does look to me as if it's bottomed. You can see here the clear rally through the trend line. Additionally, you've got confirming volume on the upside. So as long as we hold above the recent lows in the dollar, that swing low would be, let's see, around 76.74, 76.75, and if we hold that, we've got a low in the dollar. That's we could produce obviously higher highs and higher lows. So we're looking for perhaps a small corrective decline in the dollar and then higher prices. Anyway, thanks for watching. Have a great day. Bye-bye.